A gloomy year for pot stocks is ending on a dismal note, with the industry's first exchange-traded fund falling to a record low today. Joining us for more is Bloomberg's Christine Oram, who covers cannabis stocks and ETFs and more. Christine, what happened? They were the darling of the stock market for a while, and suddenly it began a trajectory that just didn't stop.
They were, and that trajectory has been heading pretty much straight down since about March or April of this year. And having the Horizons marijuana ETF hit a record low today is kind of a fitting end for what's been a pretty gloomy year for these stocks. So many different factors came into play, but essentially what it comes down to is that expectations were way too high heading into 2019. We had Canada legalized at the end of 2018. A lot of companies then came out with sales forecasts, revenue forecasts that were extremely optimistic, especially in retrospect, and just they were not able to meet them. Valuations were extremely high, so of course there was a long way for them to come down. And then on top of that, you had some regulatory issues. You had a slower pace of legalization in some major U.S. states like New York and New Jersey than was expected. You had the vaping-related health crisis. So there were so many different factors that came into play.
Yeah, I thought the regulatory issue was interesting because at the start of the year, a lot of people were talking about how the U.S. was ready to open up, and you're going to have all these states jumping in there to either legalize or decriminalize. That never really materialized, at least not on a mass scale. But the other interesting thing, and we partly saw this in Canada, is that even once it was sort of legalized, people didn't use it to the extent that some people thought they would.
Yeah, and I think, that's an interesting point to make, it that Canada was sort of supposed to be this role for the U.S. and the rest of the world as they move to legalize. And Canadian sales have been really disappointing so far. Now, part of that has been because there haven't been nearly as many retail storefronts opening in Canada as expected. That rollout has gone a lot more slowly than anticipated. In the U.S., there will be some catalysts this year. We have Illinois legalizing recreational use on January 1st, so that's a major state that will be brought into the fold. And there will be a lot of votes with the 2020 election, referendums on legalization, including in a lot of Republican states. So, I've talked to CEOs and analysts who say a lot of those are likely to succeed, which does begin to change the federal narrative as well.
It is interesting, the policy positions of certain politicians on this. Green Thumb Industries is one U.S. stock that's doing well in comparison with Canadian peers, and it's partially because of what you just said.
Yeah, Green Thumb was one of the few stocks that was actually doing well today. It was up more than 5% at one point, and it's Chicago-based, so it is obviously going to be a major beneficiary of legalization in Illinois. It will have 5 stores ready to open and sell recreational cannabis beginning New Year's Day, with a lot more to come. And it's important to note that U.S. cannabis stocks have, especially in the last 2 or 3 months, really been outperforming their Canadian peers. There is optimism that there are going to be legislative catalysts in the U.S. this year, state-level catalysts, and that those states that have legalized, like Illinois, will prove to be very large markets, unlike Canada so far.
Are you anticipating some degree of consolidation here? It seemed like there was a new cannabis company kind of cropping up almost every other week, or going public, or doing some type of listing?
Yeah, absolutely. I think we're going to see consolidation, but also bankruptcies heading into 2020, that not all of these companies are going to be able to survive, particularly the smaller ones. Capital markets have essentially frozen for all but the most successful companies at this stage, so raising money is virtually impossible. Companies are running low on cash. Even large, well-known companies like MedMen in California, it's down about almost 90% this year because it's running low on cash. And no matter what it does, the stock price seems to continue falling. So, it's not going to be an easy first few months of 2020 either for the sector.
And what's differentiating the successful ones from the very non-successful ones?
Well, it really comes down to sort of the obvious question, which is, can they turn a profit? And there really haven't been very many that have been able to do that so far. There are a few U.S. companies like Curaleaf, Cresco Labs, Trulieve that are dominant in large states that have been able to at least get to EBITDA profitability. Those companies are able to raise money, but the rest are still struggling.